This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. This is going to be a bit of a longer video, even though I'm going to try to do it very quick. So we are going to go into the datasets, the earnings, the SPY technical analysis, the tech analysis for the Mag 7 related stuff, semiconductor analysis, treasury analysis, precious metal analysis, crypto analysis, and potentially some other symbols if we have time by the end of this video. And that's going to be for the week of October 20th, 2025, and I will timestamp each section, so if you want to skip to a section, have at it. And with that said, let's go ahead and start with the data. Some of these data sets are going to be postponed or delayed due to the fact that the government is still shut down. Hopefully it opens this week. If not, I believe this will be week 3 of the shutdown, which is, very, very bad deal. It's negative 15 billion in GDP every week this continues. So, if we go through the entire third week, then that'll be 45 billion reduced from the GDP. So that's not a good thing. Yeah, with that said, Monday, 10 a.m., potentially we have the uh, industrial production, retail inventory data. I don't think any of that's coming out. Same with the US leading index. I don't think that's coming out as well. So very likely next to no data tomorrow. But I can be wrong. It's generally only stuff coming from the Fed that's going to be included into the data sets currently. So the Fed speakers, for example, Tuesday there's Fed Waller speaking at 9 a.m. Fed Waller will be speaking. Then on Wednesday, let's see, we have the 20-year auction. That'll still be ongoing because that comes from the Fed. Uh, that that isn't postponed or delayed or anything. What else? Vice Chair Barr, he speaks way later. The jobless claims this week, I believe, will still be delayed. Not entirely sure about that, but from what I know, it'll still be delayed. Hold on, let me scroll down the list a little bit so you all can see better. But if it's not delayed, say they get the government up by Monday, Tuesday, maybe even Wednesday, then potentially we might see some of this jobless data or jobless claim data. I don't think so. I think very, very likely the continuing and initial jobless claims will be delayed. Existing home sales, I don't really care about that too much right now. There is FOMC Bowman speaking at 10 a.m. and Barr speaking at 10:25 a.m. That's what's important for Thursday. Now for Friday. Friday's the really big day because the CPI is coming out on Friday. This was originally delayed for I believe 2 weeks now. Yeah, it was supposed to come out 2 weeks ago. Yeah, it's been delayed. And now it will be coming out on the 24th. So we'll have an extremely busy day because potentially we'll be getting this PMI data as well. I'm not entirely sure if we will, but I believe it comes from a secondhand reporting. Yeah, it comes from the S&P Global, so very likely we will get that PMI data from the S&P. So we'll have CPI, PMI from the S&P. Some of this inflation data I do think will still come in because this comes from the Federal Reserve, I believe, University of Michigan. We'll see. Sales. But yeah, Friday is going to be the really key day just because out of any of these data sets, besides the 20-year bond auction and some of the Fed speakers, none of this other data is confirmed. Potentially none of this other data can come out except for the CPI. That is a guarantee. So yeah, look forward to that. That's something that the market definitely wants. We haven't seen any data for the last 2 weeks now, basically, unless it's come from a Fed speaker or from President Trump enacting something like that. So it would be nice to start getting our data sets back, but that entirely depends on the government shutdown. Now, going into the earnings. Now, for the earnings this week, we're starting to get back into the, quote unquote earnings season where we get all of our big tech earnings and everything. I wish I could shrink this down a little bit. I'll have to figure that out for next video. But for this one, um, it's mainly, let's see, we have Netflix on close on Tuesday. So that's obviously going to be very important. From what I know, their revenue is down, but that's just based off of basically speculation right now from what I've been hearing over uh people canceling a lot of their Netflix accounts over the whole whatever they were talking about on there. Then on Wednesday afternoon, we have Tesla. That's going to be a very big earning because Tesla's really pushing some major weight again. So definitely going to be a major earning, and especially this is after the fact that the EV mandate was pulled, so that officially stopped on, I believe, September 28th, which means that people no longer get the $7,000 tax rebate back on their car, um, which that's a big deal. I do think that's going to hurt their buyers quite a bit. So we'll see what they have to say about their earnings. Um, Either way, it'll be interesting. I know that Tesla really isn't fully a car company anymore. It's going into AI slash um, robots and all sorts of wonky stuff. So, um, yeah, Tesla investors, you guys are you guys are champions. You just hold through anything. So that's all you have to do is just keep holding. Thursday, Intel, that's definitely going to be a big deal right now since the government bought in 10%, I believe. So everyone kind of wants to know what's going on with Intel, what will be happening with the future of it, blah, blah, blah. Guidance is important. So very likely, again, Netflix Tuesday, Tesla Wednesday, Intel Thursday, and these are all in the after hours. Now, there really isn't anything I'm looking at too much in terms of other earnings for this week. Let's see, there is Lam Research, which is LRCX. That's Wednesday afternoon, so that could be potentially a nice trade as well. Usually a slow grower, something I like to pick up cheap equities and watch them grow over time. What else? NEM. I don't really care about them right now. Yeah, I think that's going to be it for the earnings. So again, just the after hours in Tuesday, Wednesday, Thursday. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into tonight's technical analysis for SPY, and just a reminder, we're going to be going over basically, I think around 20 different symbols over the next probably 20-30 minutes. So buckle up. We're going to be doing things quickly, but hopefully in a way that everyone can understand very easily. Now, I also want to address one other thing about my technical analysis is that I don't try to present a duality type technical analysis point of view, meaning I don't just try to focus on both the bullish and the bearish. It's that's how my point of view naturally comes as a trader. So it's not like I'm trying to be the midline between like, oh, I'm always calling it right because I'm, 50% right, 50% wrong. That's not what I'm trying to do here. It's that when I trade, um, I actively am pathing out. Either it's going to take X and go up, or it's going to take Y and go down. And simply that is how I trade. And that's how I'm always going to be presenting my technical analysis, thesis, everything else, unless there's something I specifically see as a, extremely bullish or bearish setup, then obviously I'm going to mention that. And, I think I've been pretty clear overall that I do try to focus on those singular directional moves a lot less unless we're at the upper Bollinger or lower Bollinger and starting to see a trend change. So with that said, let's get into the S&P. So I have the moving averages written above. We're going to very, very quickly discuss what's going on with the daily moving averages. So the market closed at 664.39 on Friday, and with the 5 MA being 663.09, on Friday, it's essentially going to open basically around that 663.70, 663.80, give or take. Just make sure you write down the number, because the 5 MA will be extremely, extremely key in determining, a very short-term support. And we're in a very, I don't want to call it wonky area, but we're in a really wonky area right now where as of, let's see, so unless the 5 MA pulls up above the 10 MA and the 20 MA, then as of tomorrow, Monday, it should still be below the 10 MA and the 20 MA. With that said, the 10 MA should actually be crossing below the 20 MA tomorrow as well, or at least basically hitting the level and consolidating. So that's saying that our medium and long-term support, and by long-term I mean over a month's period of time, um, are consolidating. And we now have the 5 MA, which has pulled below both those levels, which that is showing a short-term bearish trend. Now, if this pulls back upward, and if those moving averages are consolidated on top of each other, that can suddenly change this from being bearish to bullish very easily, because with 1 or 2 buying days pulling above both these levels, say we have the market close at 667 tomorrow, that would pull the 5 MA up all the way to 665, 60-ish, give or take, and that would also pull the 10 MA up slightly, so the 5 MA would be above the 10 MA, and above the 20 MA, the 10 MA would be above the 20 MA, and basically that primes you for a massive move upward if they're going to continue buying. So I hope that makes sense from the moving average standpoint, is that potentially, even though the trend is bearish right now, buying from this level can be extremely, extremely bullish, and we could see that 575 range within the next 3 trading sessions if we head upward. Okay. Now, going over structure, and actually I just want to mention the upper Bollinger and the lower Bollinger. The upper Bollinger has been pulling downward, and the lower Bollinger has been pulling upward. So that is a further showing of consolidation. And what really happens with consolidation is it creates very large moves, because I've discussed this in other videos. Either the market is going to be in a very tight consolidation area, or they're going to be having the move upward in the basing moves. So, for example, we're in an extremely tight consolidation range right now. That was a basing move, but it came from an extremely tight consolidation range. That was a basing move. It's basically that massive move upward. Massive move downward was a basing move to the downside. Consolidation in this range broke down. Basing move to the downside. Rinse and repeat. So essentially the market's always consolidating or always basing. Now, we have been consolidating for quite a while. I want to say for about a month and a half. Let's double check the date. Yeah, for a month and a half, almost exactly. So, where that puts us right now is that we're still within this consolidation channel. We're essentially right smack in the middle. Currently the overnight price is at 665.20, so that puts us basically right in the center of this consolidation channel. Now, with that said, there is not a whole lot of downside currently. If this major buying channel is going to hold. Okay. If this major buying channel is not going to hold, excuse me, I need to drink some water. Knowing me, I'll probably forget to edit that out, but was losing my voice. Apologize for that. So, if this large buying channel is going to hold, okay, and again, this is a very, very strong buying channel. It can pull down more. So, for example, if they use this head and shoulders to sell downward, and I apologize, my voice is all bad right now. I just can't talk. Um, if they pull this channel down more, like say they complete this head and shoulders, they push downward, many people would probably say, oh, that channel's broken. That could be, but it will be entirely based on structure, and what structure really needs to break is in this range. Okay, that's the consolidation channel that needs to break. And how do you break that? Well, you get into that range. So very likely, if we get selling, any sort of major selling anyway, we need to see that range fully worked out, and we need to make sure it doesn't bounce up from that range, okay? Because what this range creates is an extremely large head and shoulders on the daily time frame. Okay, if they start working on that shoulder, then that creates a massive head and shoulders. That would be the type of head and shoulders we are looking for on top of this massive cup and handle, essentially, to create that handle downward. So that's something I would be looking for if we start getting major selling. Because remember, I know many people think I'm a turbo bear, but I'm actually a super bull. I've just been waiting for a super good support test, and it finally did happen a little bit. But if we do get more selling, I'll become even more bullish. So yeah, we'll see. Now, with that said, this is just structure on the daily time frame. So again, that does change a little bit when we go down to the hourly. So let's go ahead and check that out. But what I was trying to say is that if this channel is within the range that it's basically supposed to be right now, if all the supports and everything are aligned correctly, which so far I know that this is correct. But again, this can open up a little bit more if it wants to. So just be aware of that. I know it doesn't make a lot of sense right now unless you've actually studied a lot of my like structure theory and channel theory, but I just don't have a lot of time to explain that in this video right now. But either this channel is going to break massively or it's going to pull down and extend if we're going to have a selling. There will be a very distinct difference in how we determine that, and I'll show you as we get there. Now, going into the 4-hour chart, and please feel free to follow along on the hourly, because that would probably work a lot better for you. Now, we talked about this last week, how we had bear structure in there, and this was a head and shoulders. Don't really want to draw it out right now, but I will. There was that micro head and shoulders. That's supposed to come down. Anyway, you get the point. There's a micro head and shoulders right there. That completed, and from that micro head and shoulders, they built a cup and a handle. From that cup and a handle, we chopped in this range. And even though it is chop, it was a micro cup and handle. Now, from that chop, we had a major rejection off the top of the channel, pulled downward, and now we're trying to build further structure. Now, what structure has been built? So on the upside, there has been this micro cup and handle. However, that was rejected. So that was rejected, and we can tell with this candle downward basically. So if this is going to head upwards, then either we're going to be looking for a double bottom, or we're going to look for this cup to finish to the essentially the 669 range. Okay. And from that cup going to the 669 range, very likely we want to see it break above that range and hit close to the top of this channel to reject, form a handle, from that handle bring the breakout. Okay. That would be the bull thesis. Not the thesis I'm actually looking for right now, but just remember when we are at the bottom of a major buying channel, that is when you set up long calls. So as much as I don't like the bullish structure here, this might be, one of the most bullish moves we get for the next 6 months. Because potentially what's above us? The 720 plus range. So breakout from here can be extremely bullish. Now, with that said, there is some bearish structure here, and I'm sure you all can spot it, and that is this head and shoulders. And so far, this head and shoulders looks extremely good. We just need a further breakdown within this micro head and shoulders, which there is one building right here. There is the head and potentially the right shoulder. Okay, and that could be building right now. As we did pull up to 666 something in the overnight, and now we're pulling back down to the 665, down to the lower cents on that. So if we have a rejection from here, that could create the head and shoulders to take us out of this buying channel or, extend it as I talked about. Now, what's really important is if we're going to sell, we really want to see the selling take to the bottom of that consolidation channel. And what is at the bottom of the consolidation channel? Let's just check our moving averages and everything again. So the bottom of that consolidation channel is the lower Bollinger. So as we start pushing downward, the lower Bollinger will open to the downside, and that would be the bottom of that channel. So a very nice lower Bollinger move would be that move for the bottom of that channel. Okay. Now, let's see. On the daily, the ADL has been pulling back upward, but it's still tapering within a pretty clear range. I wish I could extend this a little bit. But you can see the head and shoulders within the daily time frame. Within the weekly time frame, we're seeing the ADL pull down as well, and we're seeing the moving averages starting to pull down on the weekly as well. We're seeing the upper Bollinger and lower Bollinger starting to open up towards the downside a little bit on the weekly as well, which that shows that there is tapering at the top. Okay, we even had a red weekly candle. I didn't even notice that until now, but that is kind of a big deal, as we have not had a single red week essentially since the beginning of this rally all the way in April. So yeah, that's a big deal. But I think that's going to be it for the SPY technical analysis. We're essentially trading right where the 5-maw's at, so as always, make sure you are writing down where the 5-maw levels are at, and not just writing down where the levels are at, but write down where the upper and lower bounds of those levels are at. Very likely we're going to be testing the 5-maw tomorrow, If we have a rejection from the 5 mile, then that means we will be heading down to the lower Bollinger. If we have massive buying, we still have two other moving averages to push through. And then from that, we would have to retest the 5 mile above these moving averages. And then we could really open up the upper Bollinger. So I don't really think we'll see the type of buying to where we go from, the 665 all the way to the 675. I don't think that's the type of move we'll get. Um, Usually you'd see a little bit more chop and then the push. So we'll see about that. But that's the SPY technical analysis. Next, we're going to go over QQQ. Now, it's pretty much almost in the exact same situation as the SPY is, but taking a closer look, you can see that as of tomorrow, Monday, the 5 mile will be pulling above the 20 mile, which technically that is a bullish indicator. I don't think it'll be pulling all the way above the 10 mile though. It will be challenging that level again. So again, a rejection downward from here in QQQ would also pull the 5 mile below the 20 mile again. And that would make it so it's not so neutral in terms of being bullish or bearish. Right now, technically it's bearish. Primarily because the 5 mile is under the 10 mile. That is technically the first bearish indicator, but it's on an uptrend. So if that uptrend continues, then that bearish indicator kind of doesn't matter. That means if you're bullish, essentially you can buy calls here and your expectation really is towards the upper Bollinger. That would be that 615-ish, 617 range, give or take about 2 weeks out, roughly, if the upside is going to be bought. Now, if we're heading to the downside on QQQ is actually built really nicely. So we'd take that, we'd retest the 20 mile, retest the 5 mile, basically right at that 20 mile range, and then head downward towards that lower Bollinger, 590. It would be pulling down basically to the 588, 587, give or take. About 1 or 2 days on QQQ and you will know if this is extremely bullish or, very, very bearish, essentially. No real thoughts in terms of one way or the other, but I do like seeing the upside in the 5 mile. That is, telling you the shortest moving average is moving upward, is seeing buying. So as long as that continues moving upward, as long as the buying is continuing, then the full expectation would be you guys are going to see a full basically $10, $11, $12 from here. So that's QQQ. We're going to go into NVIDIA next. Now for NVIDIA, and I apologize, I'm just going to be taking a look at these on the daily to weekly chart just to give a very, very brief glimpse of kind of what's going on. Now on NVIDIA, we've had this extremely, extremely large consolidation range. And let me just really take a look. This is a very good example of a consolidation range and a basing move because you have a very large consolidation right in here, basing move to the upside, and then consolidating. Okay. Now, so far within this consolidation, just structurally, oh, I do have some stuff drawn on here. It's been a while, but we do have this inverse head and shoulders that did fill out. And that's how you got that upside to the 195, almost 196. It probably was 196 without the dividend. So we will just mark that up there. We're going to take this consolidation channel, pull it to the upside. We're going to take this selling channel and extend it a little bit further. Okay, so we saw the buying. From that buying, we had a cup which of course isn't working. We had a cup fill out, and from this cup, we had bearish structure. And from the bearish structure so far, we are seeing a little bit of bullish structure, but it needs to finish out further. And this is the perfect example of what a bullish cup and handle would be. If NVIDIA is going to see that upside, then this is kind of exactly what you're looking for is, we filled out the bullish cup, built the bearish top of the cup and handle. Now we're seeing the bullish bottom of the handle. Now we just need to see the breakout to the upside. So again, if you're bullish on NVIDIA, this is a very good range to take calls towards that upside because the upside is very large. And how large is it? Let's see. So the upper Bollinger is currently at 192, almost 193. The 5 mile is at 182. It will pull up to 183 tomorrow. That means it will start challenging the 20 mile by Tuesday if we see continued buying into tomorrow's session. The 10 mile is above the 20 mile, so that is still bullish. So kind of a similar thing with QQQ and SPY, just structured a little bit differently because we're coming out of an extremely large consolidation range. Either you're going to see the 5 mile get retested and rejected to the downside, and from that downside, the downside is the one that 74. It would open up even further, possibly even taking the 168 range. From that would be an extremely good buying range. And that's the super bearish thesis, but that's kind of bullish too at the same time. Now, for the bullish thesis here is that the 5 mile isn't starting to curl back up, but it is flat here. So if you see a single day of buying within the next 1 to 2 days without a major sell, then the 5 mile will be challenging the 20 mile and the 10 mile, which that's very bullish. Seeing that challenged on the upside generally leads to large upside moves. Perfect example right in here. Large upside moves. So if you're bullish, the upside is massive from here, okay? But this still can break down. We're not out of this consolidation channel, and until we break above it or below it, then the expectation should be to go from the top of the channel to the bottom, to the top, to the bottom. And we're still within this very large selling channel. I've been looking for this to expand for an extremely long time now, and it finally just did that just within the last few weeks, so I'm finally able to mark that down. It's looking good. Sorry, my daughter's banging on the wall. Yeah, that's gonna be NVIDIA. Again, very bullish structure. It looks like chop, but this is extremely bullish up in here. We just have to see it not break down to the bottom of that consolidation channel. And if it does break down, then, I'm personally going to be buying the dip on that one. If we see it break down even further, I will again be buying the dip on that one. Next, we're going to go into Apple. And let's take a look. Okay, I can already tell you Apple is very bullish. Yeah, Apple is super bullish. And the reason why, bottom Bollinger, you have the price action basically below most of the moving averages. We had the 5 mile tested in here to the upside. The moving averages were in an entirely bearish position, so we had the 20 mile being above the 10 mile, being above the 5 mile, and that's now starting to turn, rather than it doesn't look like it's going to have further continuation to the downside. Just based off of the moving averages anyway. It looks like it wants to just rip up to the upper Bollinger, which that's the 261. That would be a whole essentially $9 to $10 from here. Looks very nice. You have that very large cup built. From this cup top being built, which it absolutely has been. It cleared that level perfectly. Um, you can see a further extension to the upside, so just be aware, really cautious of that if you're trying to short this cup top. Generally you don't short when you're at the bottom, near the bottom Bollinger. That's generally when you're loading up calls, because just like consolidation channels, Bollingers also like to trade from upper Bollinger to the lower Bollinger, upper Bollinger to the lower Bollinger for the most of the time. So, yeah, Apple looks super bullish right now. I might even be taking calls on that. Now, getting into Tesla, let's see if we can find it. I am very blind. Tesla, there we go. Okay, let's delete the drawings for a moment. Let's see what we got going on here. Alright, so Tesla, let's check the weekly. The weekly looks super good too. Okay, so Tesla. Tesla had a very large consolidation channel for a long time that did see a breakout. Very nice breakout, and that's to the upside of this cup. Okay, now just be super aware of where the top of this cup is. Top of this cup is up at 489.39. We have not hit that yet. Okay, let me just turn off the Bollingers and everything so that you're very aware of that. This cup top has not been hit yet. Okay. Without even looking at the Bollingers and moving averages and everything right now, the very high likelihood is that that's going to happen. You're going to see some sort of movement like that. And the reason why you'll see some sort of movement like that, I'm going to delete this consolidation channel, is so that this extremely large cup gets built out. Okay. I would be looking for that extremely much if I was a bull. Now, what's important here is where to enter, and let's talk about that. So, Tesla is in a very nice range too. And the reason why it's in a nice range is you saw the moving averages break down, okay? From that breakdown, we saw the market price almost hit the lower Bollinger, but entirely reject it. And now that rejection is turning into retesting the moving averages. And not only retesting the moving averages, you're seeing the 5-mile, the 5-mile buying above the 10-mile and the 20-mile currently. The overnight price is at 443.20. With the upper Bollinger being at 456.51. I'd be looking at that 470 within about 2 week to 3 week span. Those calls look super primed. The only thing you have to worry about here is potentially this being a very sneaky head and shoulders, because again, this can turn into bearish liquidity if we have a rejection. You guys do have a major earnings this week on Tuesday, I believe, if I remember correctly, Tuesday afternoon. So be a little cautious of that. However, again, the upside here is massive. And it looks very good. It looks extremely good. The price has been near the lower Bollinger, which means you're still within the range to get calls. Um, yeah, looks very bullish. Looks very nice. Okay. Let's go into Netflix. And you guys also have an earnings this week. Let's see what your price action looks like. Can't be all of Netflix's chart. Oh no, that was a leveraged version. Okay. This looks a lot better. Let's set this up to the weekly chart. Let's fix this buying structure really quick. Okay, this goes all the way back to the very, very beginning. Very interesting. Okay. And that almost hits the top right on the money. So yeah, that's where that channel is at. Let's see where you guys are trading within it. Sorry, I just have to look at all this. I haven't opened Netflix's chart in a very long time. Guys broke out of this very nice consolidation channel. All my targets perfect there. Kind of makes me upset because I didn't trade it. Got to the upside, stuck within a very large consolidation channel again. And let's just mark that out. Now, from this consolidation channel, you do have the moving averages heavily consolidated in here. Means pulled together very, very tightly. Now, you did have some bearish structure in here. You had a head and shoulders. That is what gave you that move below the lower Bollinger, and that pulled you all the way up to the upper Bollinger. However, you did not get a upper Bollinger move from there. You had a rejection of the upper Bollinger, which that is actually very bearish. We had the 5 mile pulling down. We have the 10 mile pulling up. So a very large bounce from here would create this cup and handle back to the upper Bollinger. That's what I'd be looking at as a bull right now, especially with like this massive liquidity built within this inverse head and shoulders. That looks very good. That looks extremely bullish for this gap right there. And that takes you all the way to the 126.4. That looks super good right there. With that said, the price action was closer to the lower Bollinger for quite a while. It was basically consolidating at the moving averages and rejected it, pulled downward, and now we're seeing buying back upward again. We didn't see a rejection below this other prior rejection range, which means that this is a higher low. This is creating bullish liquidity so far. If you see a major rejection happen in here, then you can pull down to this lower Bollinger quite easily, and that would invalidate the bullish structure within the cup. That would create a inverse cup, or an inverse cup to the downside. You'd have the head and shoulders, then the inverse cup. So that would be, a continuation of bearish structure. Again, you have a very large head and shoulders right in here as well. So just be wary that, continuing bearish structure does lead to a downtrend. And if I were to mark this chart right now, we would be within a selling channel. But just because you're within a selling channel doesn't mean that things can't be bullish. I see plenty of upside here. You just have to be very cautious. Netflix's earnings are this week, and from the just top of my knowledge, there has been a ton of cancellations due to some drama on some of the shows. So just be aware of that. Now, I do want to go over Amazon really quick. And let's see. I can already tell you Amazon's very bullish. Okay. The reason why it's very bullish, you had this bearish structure. It already pushed down. Um, you might get another day of downside, but from that downside, that'd be a day 2 lower Bollinger move. It works almost the exact same as an upper Bollinger move where the day 2 lower low, you buy calls and essentially you ride those forever. Yeah, it looks very bullish. I would be looking for that lower low into buying calls to take all the way up to the 238. I think that's extremely, extremely ideal here. You have this major cup that actually didn't fully finish yet, so I would still have the expectation of that finishing out. This is not an inverse cup that did not finish out. That is bullish liquidity within, as you can see, there's a cup handle, and that's what created the breakout rather than it being a bullish structure or a bearish structure, I mean. So I would be looking at this as a bullish structure. I would be trying to very, very likely take a bullish position here by tomorrow. Sooner the better. So yeah, that's Amazon. And very, very quickly going to go over the VIX, and that's going to be the Mag 7 section. So VIX, let's see. So VIX had that massive breakout. It is above the upper Bollinger for a few days now. It did have a 5-month test, but with it having consistent upper Bollinger push, that is bearish in terms of the VIX, because just like any other fund, say this was the SPY having this type of movement, we would be shorting that. With VIX, the same thing. That means that this would create a bullish upside to equities if we have it pull down. However, with volatility, you can have continued upside, upward Bollinger pushes. So if volatility is going to continue, if we're going to see continuation within the selling, and if the sell-off isn't done, then this will still keep pushing upward. Okay. Right now we're at 2078. I think very likely it's going to open probably around the 2 or around the 18 range. That's the cautionary range, but that's not the really quote unquote bearish and fearful range. That's really being above the 20 plus. So what I'd be looking at is the VIX, and that's VVIX. Now, I'd be looking for a sustained level above 98, and I know I've described this before, but a sustained level above 98 means that selling is actively happening. So it's been holding basically above the 112 for the last few days now. If we're going to see buying start happening within equities, then this will pull down very, very, very quickly. We've seen this tool go from all the way to 150, all the way to 88 within 1 to 2 sessions. So it moves very, very drastically. If the selling is over, then the VVIX will tell you, in the most plain terms, because it will pull down below that 98 price extremely quickly. Okay. So that's what I'm looking for in the Mag 7 stuff. This video ended up a lot longer than what I originally planned, so I'm going to kind of fly through these next ones. I apologize, but we're going to be going through the semiconductors, then the yields, and then the precious metals, and then crypto. We won't be doing the other stuff unfortunately in this video. Anyway, this is SOX. This is the iShares Semiconductor ETF. I was going to go into SMH, but I'm going to skip that for this video. I apologize. I will cover that in a different video though. Going over SOX, okay. On the weekly time frame, it is overextended quite heavily. This is technically going into the 4th week of it being above the upper Bollinger, above the 5 mile. The 5 mile is currently at 274, so we do have a lot of work to the downside to start doing. Now, from a structural perspective, we still see bullish structure here. We see the 5 mile pulling above the 10 mile. As of tomorrow, it will be, let's see, a whole $2 above the 10 mile. So that's showing that very likely it does want to push right back up to the upper Bollinger. That would bring the price basically all the way up to the 301 range, as the upper Bollinger is currently at 295. Now, a rejection from here would cause the 5 mile to pull downward towards the 20 mile, and that would potentially start creating a really bearish selling channel. But we're not there yet. Right now, everything still says that we're in bullish land for the semiconductors. Now, quickly going over Intel. If I can find it. I know I have it on my watch list. Oh, come on. And there it is. All right. So this is the daily time frame, and I have not looked at this in quite a long time. We're going to look at the weekly. We have a slight overextension on the weekly, but not really. As we've been below the weekly 200 MA for an extremely long time. I mean, Intel has been under there basically since 2021. Now, there was a slight gap that it pulled above that in early 2024. And then there's this gap now that is happening at late 2025. You generally don't stay above the 200 MA for very long, currently in Intel's situation. Now, with the government money pouring into it, it might entirely change the trend to where they will stay above that 200 MA again, because there was a period of time where they traded very well above that 200 MA. But now it's kind of following that downside of the 200 MA. So if the buying is really going to continue and really pick up from here, then the upside is very large. Okay. Now, going over the daily chart, you do see how there was some major buying in here and it tapered off. That doesn't mean the buying's done though. Let's see. We have the 5 mile. It was pulling down slightly, but it is starting to pull back up again. If it pulls above the 10 mile again, then that opens up the upper Bollinger. The upper Bollinger is currently at 40.67. That would open up all the way to the 41 to the 42 range, potentially even 43. And you do have plenty of gaps open above that. So you have this, let's see, that 37 that's already being taken. You have this 45. You have this 46.27. You have this 50.04 and 50.60. So plenty of upside to Intel right now. It looks really good. It's just a little cautious because you don't want to load into this right now and then have some downside. But kind of indifferent though in that regardless. If you're going into shares, it's really safe because even if you do have downside, the likelihood is you're going to see that upside again. If you're going into options, this isn't the best place to take calls unless we start seeing a major break towards that upper Bollinger. Um, a push to the upper Bollinger would be good enough for the option moves. Um, so that would be great, but you have to know that that's coming. Okay. Now, getting into yields, let's quickly go into TLT. Now, for TLT, I did mention this, but let's see, I want to make this look a little better, and I am going to turn off the moving averages because those don't really matter here too much right now. We talked about this cup and handle forming. And even though this cup pulls all the way up to the 9202, that was just a single candle. So I don't really look at that range. I'm looking more towards this 9129 range, which we already hit very well. Okay, so we did create the cup, we did create the handle. Now we're just looking for the breakout of this handle. Okay. With that said, this handle itself is also a cup. So from that cup, we do need to look for a handle before we have that true breakout to the upside. But again, I'm still looking for that 97 breakout occurring very soon here. And by that, I'm looking really no later than late November. If it doesn't happen by late November, I'll start to question my thesis a little bit, or if any type of data comes out that, you know, pushes against the bonds again, then I'll, obviously change my thesis up a little bit. But currently, TLT looks extremely good. However, if you're trying to time contracts for any sort of short-term move, just understand that we are within the upper Bollinger right now. We are near the top of this other cup. The likelihood is that we're going to tap that range and see a rejection. From that rejection, we could pull down all the way back to that lower or that upper 88 range. But from that upper 88 range, that would be a huge buying opportunity to take all the way to the 97. Excuse me, I'm losing my voice again. Super annoying. Okay, that's TLT. I'm going to turn off the drawings and we're going to look at the DXY very quickly, if I can find it, because I'm a blind man. DXY, let's see, I want to look at the weekly chart. Weekly chart, very slightly overextended. On the daily chart, we're retesting some of the moving averages right now. We do have a little bit of bullish structure going on in here. As you can see, it's creating a cup upward. It did not create the full cup yet, so if it wants to reject the 20 MA and head upward again, then it can definitely head right back up to that 100.20 range. Overall, I'm not bullish on the dollar, but short term, I do think that there are some reasons we can see some strength in the dollar until the Fed actually starts doing QE. Once the Fed does QE, the dollar pretty much melts. But until then, there's still some reasons why we could see some upside in the dollar. I was going to go over the HIG. I'm not too interested in going over the HIG right now. We all kind of know there's been some selling in it. I'm shorting it. I'm still shorting it. I have the same thesis in HIG. Said I wasn't going to go over it. Now I'm going over it. We were towards the lower Bollinger. That suggests that we're going to head upward again. We're seeing, let's see what gap this was. They did take a really nice inverse cup here, so if we see a continued rejection from here, then that would create the inverse cup and handle and push us down towards the, let's see, the 78.60 range. With that said though, there is a potentially very nice micro cup forming in here. From that micro cup, they just need to form a handle, and from that handle, they can slowly head right back up to that 81.20 range. So be cautious of that. Now, I do want to go over precious metals really quick. And going over gold, I was going to go over silver as well, but silver and gold are kind of in the same boat right now. Now, silver and gold are very, 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 very overextended. No, this is the weekly time frame. This is, let's get the GQ main. As you can see, it's not very common that you buy this consistently and this long above the upper Bollinger. Now, am I bearish on gold and precious metals? No, 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 not at all. I think that the upside still has a full 70 to 80% on the majority of precious metals right now. But with that said, and there's a big but to that, you want to buy on the right dips. Okay, you don't want to keep buying into the upper Bollinger. Because that sucks. That's a terrible price to buy in at. I'm not saying we're going to pull down all the way to the 3,000 something range again, but I would be looking for the 20 MA. If you're bullish on gold, which, I think there's a ton of reasons to be bullish on gold, then every time we get to the 20 MA, that would be a very, very good time to load up. And that's going to work the same with silver. Both of those are going to work essentially the exact same. Now, finally, I wanted to go over Bitcoin because I know many trade it, and obviously we need to dig into it. This is the weekly chart for Bitcoin, and I am going to pull up my drawings because I do think I have some nice ones if I remember correctly. I do. Okay, that was me highlighting a basing move for somebody. So let's see here. It did break below this consolidation channel very, very briefly. However, from those very brief moments, it is pulling above that channel again. So it can create support at the bottom of this channel. But now we do have to further extend this channel downward. Okay. That means that very, very likely the majority of this price action in here is also connected to this. So with that said, very likely our consolidation channel can go all the way down to the 98.3 range. Am I expecting that? No, not right now. I'm not anticipating that right now. But from structurally, let's see here. There's not a lot of bullish structure going on. You really need to see some buying in here, and what you need to see is a cup formed. Even if that's just like the first structure you're looking for is you want to see a cup formed, you want to see a handle form, and you want to see this upside taken. And the reason why you want to see that is because there is a large pocket of liquidity right there. There's a large pocket of liquidity right here. If they create that third pocket of liquidity, that creates an extremely large bull structure all the way up to the 126 range. Okay, so that's how you'll get back up to the 126 if we're not going to be headed down further. Now, I can't pull up the Bollingers and moving averages on the PC or else I would. Very likely this is towards the lower Bollinger still. I know it was previously when I was looking at it, and that was before some of these really massive candles. So very likely it's towards the lower Bollinger, and that makes it a buy. That doesn't mean you guys can't see this 98 range. I think that with how large the selling has been and how the structure is moving downward, that is pulling downward, that is suggesting downward. If you don't see some massive buying very, very soon, and I would say the next 2 to 3 days, I would fully anticipate that 98 range. Um, if you hit that 98 range, then you kind of sell everything and, buy Bitcoin and retire. So there's that. But yeah, that's the analysis for this week, everybody. I will be doing the obvious daily SPY analysis as always. I just wanted to make a longer video tonight for no real reason. Just going over a little bit more. Now, I had a bunch of other symbols and everything I wanted to go over, just running out of time, and I don't want this video to be 2 hours long. So, with that said, I will talk to you all tomorrow. I hope everyone has a very, very great trading day tomorrow. And remember, whichever stock I said looked super, super prime, I want someone to tell me in the comment because I would really like to take calls on it. I think it was Amazon. Um, but yeah, take care, everybody. Have a great night, and I will talk to you tomorrow.